Hi, I'm Kelley Norton, your AZ Realty lady at eXp Realty. Count on me for all things Arizona real estate.
Hello and welcome to this episode of Arizona Real Estate Lifestyle Show. I am Jayson Bates, owner of Electrum Financial, and I want to thank you for joining us and allowing us to be a part of your day today. Kelley is on assignment this week, so we brought in a special guest, and I'd like to introduce you to her. Her name is Alicia Mujica. Excuse me. Sorry about screwing that up there. Hello, Alicia.
Hello. I am so grateful to be able to have this opportunity to be a part of Arizona Real Estate Lifestyle. And I am joining you from Tucson. So I have insight into the Tucson market. And I also just have a love of real estate based on my own experience. In 2015, I was not a real estate agent. I purchased my first townhouse. Unbeknownst to me, would need to sell that 3 years later because it was going to be a move-up buyer type situation. And we were expecting our third child and we only had a 2-bedroom townhouse. So we used our equity from that and we were able to buy a home that was big enough to suit our family's needs. And during that process of buying our second home and seeing how the real estate market works, like how you can actually make money out of nothing, essentially, in my mind, that's what I thought. I didn't really, I couldn't believe that we were able to turn $40,000 profit on the house that we were selling and use it as a down payment for our next home. So that just was mind blowing to me. And I had to get my real estate license. And so here we are. I have been licensed in the state of Arizona for 3 years now. And any questions, just my information is down here on the screen.
Awesome. Thank you for being a part of the show and filling in for Kelley. We really appreciate that and looking forward to your insights here. And we always like to look at Tucson as the sister city to Phoenix, right? So the old Pueblo.
It's beautiful down here, yes.
It is beautiful down there. It is really pretty down there. Hey, I want to get into, because I've got some really cool stuff that I want to share with everybody. A lot of people, we're in this kind of, I want to say it's a little depressing maybe, environment. Rates are going up, values are going up. I'm never going to be able to own a home. What the heck is going on? What can I do, Jayson? So I want to give some strategies. We put some things together here that I think will help you and maybe encourage you that, hey, now might be a good time to purchase a home. So with that being said, let me jump over here and let's jump into the first thing here, the first, if you will, kind of topic here. So this is a program here that is not necessarily unique to me, but not many lenders have access to this program. It's called the Freddie Mac Borrower Smart program, and I'll highlight it down here. Sorry if I'm looking away and I'm losing my earbud here. But it's a program that will give you up to $2,500 toward your closing costs. Now, this is in addition to you getting, hopefully, with the help of Alicia, an excellent realtor, who can help negotiate seller concessions. As we've heard, and you may have heard that, buyers are a little more open to giving seller concessions right now, depending on the deal, of course. But if with you able to get the $2,500 plus the 3% seller concessions, holy cow, you could walk into a home with very little out-of-pocket expense, and that's a good thing in this environment for sure. So I want to run through this with you real quick because you don't have to have perfect credit either. A lot of people think you have to have perfect credit. I need an 800 credit score or 700. No, that's not the case here. So I just did this scenario here real quick. It's a $400,000 purchase, as you can see right here, 5% down, so a 95% loan to value. Although with a first-time home buyer, if you have a 680 credit score, you can put as little as 3% down. Credit score is 650, so nothing dramatic there. Your interest rate with this program would be 6.4%, which is really, really good. I gotta say, it doesn't sound good compared to twos, but in today's environment, that's really good. I'm telling you, I promise you. And then on a traditional mortgage or traditional, what you may be quoted from your bank or whatever, you're looking at 7.3. Now these rates are subject to change. They're not set in stone. So please don't, call me and say, hey, Jayson, I want that 6.4. Well, we'll see where you land, right, before we get there. But 6.4%, that's going to give you a payment here of $2,300 versus $2,600. And that could be the difference between you qualifying and not qualifying on a home loan. In addition to that, again, I can't stress this enough, you will get up to $2,500 of extra money for down payment or closing costs, or to even maybe buy down the rate even further. So you could get down in the low, like 6, maybe high 5s, if the seller is willing to contribute toward closing costs in addition to that $2,500. So really, really good program. So reach out to me about this program. I think this could be very, very helpful for a lot of, people thinking, hey, now should I buy? Should I not buy? What programs are out there? What's happening? Jayson, how can you help me get into a home? This is a program that can certainly help you do that. So hopefully I didn't talk too much there on that program.
No, it's
right?
really good information. Yeah, a great information that people need to know about their options right now, because we are definitely in an environment that is drastically different than where we were even a year ago today. So
yeah. And
historically though,
go ahead.
I was just going to say, historically though, rates even at the 6% mark, it's not the worst that we've ever been. Right.
When I first started my career in the early 90s, we were in the 8s. We were in the 8% range. So 8.5, that sort of thing. So, not quite there yet. We're still in the 6s. We still can get the 6s, 7s. A lot of other companies are out there, but I'm in the 6s. So can make the difference of a $300, $250, $275, $300 difference in payment, which is a big, big deal. So now there's other strategies here too that Alicia came up with that I think is ingenious. I think it's absolutely fantastic. So this program could be for first-time home buyers, for move-up buyers. There's no restriction on this. The only thing is the income restriction. So now, rumor has it, okay, I'm not one to spread rumors, but rumor has it, Freddie Mac is going to eliminate the median income, 80% of the median income. So currently in Maricopa County, if you make $88,000, that's 100% of the median income, but if you make 80% of that, then you qualify for $1,500 towards your closing costs. If you make 50% of the median income, then you get the $2,500. Well, Freddie Mac is leaning toward eliminating that completely. So if you make more or less than $88,000, you qualify for $2,500. So yet to be seen. I think that may roll out the first of this year. We'll see what happens. But what this tells me more than anything is that lenders, Fannie, Freddie, they see the housing slowdown because rates are increasing, and they're coming up with creative ways to help encourage home ownership. So this is one of those ways to help people get into a home rather than rent, because rents aren't going anywhere, right? Rents are still high.
Yeah, absolutely.
Yeah. All right. So go ahead.
Yeah. Well, that brings me to it's on topic with what I was wanting to talk about, is with rents being high, if you're a move up home buyer, how can you capitalize on that? We're sitting on a lot of equity if we bought homes in the last 3 to 4 or 5 years. Historically high equity. And if you haven't done anything with that, if you haven't cashed out, got a second mortgage, if you're still sitting on it and wondering what to do, how do you tap into it? I have a few suggestions, or just things that I'm personally thinking about, because now that we have a growing family, we have 3 kids, we have 2 pets, we have if he's going to be this really big tortoise, we need space, like outdoor space, because we're in one of those tract homes, one of those like KB new build communities, and it's a great home. I love it. I'm so grateful to be here with my family, but we have 0.08 of an acre, so we have very limited space for outdoor space, and we live in Tucson, and it's beautiful here. So if it's a possibility, we're looking at our options to be able to get a home on half of an acre or even an acre, So that's what I'm wanting to do with my equity personally. And I'm like, okay, do I just cash out? Do I sell my house and take that? I have probably roughly $200,000 in equity. Do I take that and use it as a down payment for my dream home, the one on an acre? It's a humble house, you know, it's nothing grand. It's not a mansion, but it's a 4-bedroom home that would comfortably suit our family, and then we'd have more outdoor space to grow into. So, those are the things that I'm considering. Or do I keep the house because I really am struggling with the thought of actually giving up this 2.9% interest rate that I don't think we'll see again for time. And do I figure out how to use my best? And so I'm looking at renting it. Market value for this neighborhood is about $2,800. My mortgage is about $1,200 right now, so I could turn a profit of about $1,500, and then use that towards my higher monthly payment, because I won't be able to put down, if I'm not cashing out on this house and selling it, then I won't be able to put down the $200,000. I'd probably only be able to put down around $100,000. And that's if we cash in some investments. So those are the two scenarios that I'm looking at and trying to figure out what to do.
Yeah. And I think a lot of people are in that same position, right? I mean, a lot of people are like, Jayson, I don't want to give up my 2% interest rate just to get a higher interest rate and pay more for a home, right? Well, we want to talk a little bit about that, because there is a strategy to accommodate both and you not pay any more than what you're paying currently. And you say, what? How is that possible, right? So let's go through that scenario real quick here. And, and if you got questions or, for either one of us, please reach out to us. We'd love to answer any questions you may have about this. So to Alicia's point here, if we look at a $580,000 home here, and I know the print is a little bit small, and I apologize, I can blow it up a little bit, but I may get cut off here. But $580,000 home price, 20% down. Now that's as if you have 20% to put down. Obviously, a lot of people don't always have that, but if you sell your home, you might have that, right? But if you have the extra money, maybe from stocks, 401ks, that sort of thing, or a home equity credit line that Alicia had mentioned before, you could take a home equity credit line on your current home and then use that money then to put down on the new home, because you do have so much equity in your current home if you elected to keep both. Even at a higher interest rate at 6.75%, your total payment is $36.81 in this scenario. Now that may vary depending on, taxes, insurance, and where you live. So, and the interest rate, again, is subject to change. Don't quote that interest rate, but in today's environment, you may be looking somewhere around that interest rate, depending on your credit and so on and so forth. So, with that being said, $3,600, people are looking at that, Alicia, and saying, wait a minute, Jayson, I'm paying, $1,500 or $2,000 a month right now, and I'm going to pay $580 for a home and go into a $3,600 a month payment. How do I do that?
Yeah, that's kind of scary. Those numbers look,
They look a little scary. So one of the ways to do that, and Alicia and I were talking off camera or whatever about this, is to, if you put this money down and you elect to rent your current home, you can, and lenders will accept the rent from your current home to qualify for the new home. So as she mentioned before, if the going market rent is $2,800 a month in that home and your payment is, say, $1,500 or $1,700, you're making, $1,500 or, $1,200, $1,300 extra in your pocket that then can be used to offset this $3,600 a month payment. So now your $3,600 payment is, $1,300 or $1,500, depending on what your payment is, less. So your net is actually $2,000 a month, even with the higher interest rate. And the thing I think that's important here to note, and I think a lot of people think this, I thought this when I sold my house, was that certain homes have a certain ceiling, in my opinion. A 1,600 square foot home or 1,200 square foot home, and Alicia, correct me if I'm wrong, but it's only going to go up so much. Where a $500,000 home, maybe larger square footage, maybe a larger lot, maybe a garage or workshop in the back. Those tend to then have a little bit higher ceiling or a little more headroom to expand, right? It's taking a small balloon, it's only going to expand so much before it busts, or you get a bigger balloon and it's got a lot more room to expand, if that makes sense, right?
Yeah, and well, in Tucson, 48% of the population is renters. So there's only so many houses to rent and the demand is there. So, I mean, yeah, I think the size of the house and depending on the neighborhood, you want to take that into consideration. But we've seen rents that we never would have thought possible for those like 1,300 square feet, 3-bedroom, 2-bath houses, you know?
Right.
So, and rents aren't going down anytime soon, unfortunately. And that's why I do want to help people figure out how they can buy a house. So,
right.
Even in this market where people are scared of the interest rates, I mean, when you're renting, the interest rate's 100%. So
exactly. Yeah.
I really, buying is a good option.
Yeah, no, buying is a great option. But you know, the rent that you're going to receive on a property, and some people, well, I don't want to be a landlord or whatever. Okay, great. Then sell your home and put that money down on the new home and your payment because of the loan amount and whatnot. And you can even use the money. It's the other thing I think that people don't really think about a lot is that you don't have to put all that money down on the house. If you make $300,000 in equity on your current home, you don't have to put $300,000 down on the new home. You can put $250,000 down or $275,000 down, and then take some of that money and buy down the interest rate to make it more affordable. Now, obviously putting money down, yes, it makes the payment cheaper, but also buying down the interest rate also can make it cheaper. So maybe a combination of the both will get you to that sweet spot where you're comfortable as far as a payment goes. So don't think that you have to put all the money down. And also, I hear this all the time. People think, well, I'm gonna put more money down. Doesn't that look good for the bank? They could really care less. Once you reach 60% loan to value on a home, it doesn't matter. You're not going to get a better rate. You're not going to get favorable underwriting guidelines or anything else. Everything under equal credit opportunity is going to be the same. So 60% loan to value or less, sometimes 65% or less, will get you the same rate. So you could be 50%, 40%, 30% loan to value, doesn't matter. You're gonna get the same rate. So taking that money and maybe buying down the interest rate might be a better value for you when purchasing a home. So I don't know, is there anything else we wanna cover here? I guess the moral of the story here is that you can take the equity from your home and a home equity credit line, if you get a home equity credit line, and put that down as your down payment, use that as your down payment and reserves, as a matter of fact, and then use the rent on your current home to offset the payment here and use that also in qualifying for the new home. You can use it to qualify for the new home as well. Make sense?
Yeah, there's so many options and everybody has different scenarios and different things that they are comfortable with or want to do. So that's where you need to get in touch with myself, trusted real estate agents, or your lender to be able to go over exactly what would probably be the best way to move forward if you are looking at a move up buy situation.
Yep. And this is the home that we kind of put together this way, I guess, that Alicia kind of put together here. And this is what you can get here, $580,000 acre lot property. It's a really nice property, actually.
It's beautiful. It's in Casas Adobes, and so it's just a really nice part of Tucson where properties hold their value. The kitchen's been recently remodeled, as you can see.
Yeah.
It's an older bedroom, or an older home, so it has good bones. It has solid adobe structure, slump block.
Brick.
So yeah, so I'm really, I don't know, I didn't know much about houses before I got into real estate, but the more that I have been doing this, the more I like the older homes because they just don't build them that way anymore.
Yeah.
So you're buying a beautiful, solid treasure that you can, if you keep up on the maintenance, that'll last for a long time. You can pass it on for generations to come. You can use it as a retirement and just cash out when you're ready to retire. You can sell it. You know, there's so many things that you can do with home real estate that you just don't have those options when you're renting.
Well, and the potential in a house like this, like economy's doing well or whatever, you could put a guest house out back here, something like that, add some square footage to this home. So many options with this home. This is where I was saying the headroom on these types of homes could be a lot higher than, you know, some, I call them Taco Bells, but, you know, some cookie cutter home that's built in a subdivision that it is what it is. It's all you're getting.
Exactly. And they make good rentals. That's exactly the type of home that I have. I mean, it's a Taco Bell or McDonald's or whatever you want to call it. I love it. It's a great home, but it's just it's 0.808 of an acre. It's like less than a tenth of an acre. So you can't. Real estate's about the land as well. You know, like that's a big part of it. So if you can figure out a way right now while everything's a little bit on sale, which who doesn't love a bargain, if you can figure out a way to buy property right now, I mean, now is the time to do it, because I'm telling you, I mean, I don't have a crystal ball. I wish I did, but I do not think that, I mean, their values are dipping a little bit, but they're not going down much further, and they're only going to go up from here. And that's because the demand is higher than the supply, as far as, and that's just basic economics, you know, supply and demand. So it's on sale. Let me help you navigate this market.
Yeah, absolutely. So if you're in the Tucson market, maybe you want to buy a rental in Tucson. As she said, a lot of people renting homes down there. So the rental market is very, very strong down there. So reach out to Alicia, reach out to her, and she can help you with all your real estate needs down there in the Tucson market. And if you're looking to purchase or refinance, I can help you with that and the financing side of things. So please reach out to me for any of your financing needs. So with that, I think we're going to wrap it up. Is there anything else you'd like to add at all, Alicia?
No, I just appreciate the opportunity to be on this video podcast with you, and I hope that we can do this again sometime soon.
Yes, we definitely will. So until next time, everyone, take care, and we will see you soon. All right. Bye-bye.
Bye.